Good morning. It is the second day of April, and we've got a market that is in the futures. It's deep in the red. The Nasdaq futures are down more than 1%, and the S&P is down 0.85%. The Dow is down 0.66%, and it is the day when some tariffs are going to go into effect. And I think the markets are worried about that. I think businesses are worried about that. How's it going to affect the input cost on a lot of products? So we will see how things play out with the tariffs, but it's going to be a noisy, at best, it's going to be noisy, and we'll see how things play out as we go through, the next month. The next month is going to be quite interesting. We have tariffs that have now started, and we're going to have a lot of news around those tariffs that are going to move the market. We have earnings that are going to begin in the month of April. We just closed on the first quarter of the year. We just started the second quarter. So companies will announce their performance, their financials, beginning in about 2 weeks. That's when the very early companies come out with their earnings. And from there, we're going to be in about a month-long earnings season. So as we hear these earnings, my expectation is that earnings are going to be more negative. Companies are going to be more careful. They're not going to be as profitable. And that's going to cause some sell-offs. We saw that in the earnings that we just went through, I guess, a couple months ago, doing earnings for the full year 2024. In many cases, companies that guided down and said, hey, we're not quite sure what's going to happen in 2025. We're going to play it safe. We're going to guide to have a conservative number out there. They really got sold off. And some other companies like the data center hyperscalers, AWS, Amazon, Azure from Microsoft, and then Google Cloud, they spent a lot of money in the data center, a lot of CapEx. The market didn't like that. And all three stocks have been sold off quite a bit. Those are big mega caps. And I'm really looking forward to hearing what they have to say on this occasion. Are they going to continue to say, hey, we're totally amped up on the AI paradigm? We can't spend money fast enough. If they say that, I think their stocks are going to continue to go down. But I think they're going to be more careful, and they're going to say, hey, we've invested enough. Let's kind of digest a lot of this capital. We're going to slow down the capital spend. We're in a race. I think I would say the stories are that these companies are in a race to have the best AI or the most powerful AI. But who's really using AI, right? I'm on my computer quite a bit every day, and I don't use AI a whole lot. I've tried it. I try to use it. I try to get information from it, but I'm always fact checking my AI applications, and I use the top ones. And every once in a while, AI just doesn't get it right. And in fact, most of the information it gets is kind of good summary information, but I'm a very detailed, kind of exact, investor, where my analysis, I have to have the exact number. I can't guess at, well, it's kind of this or it's kind of that. No, it has to be exact. So I find myself really not using AI a whole lot. And from what I'm reading and hearing, most people are in the same boat. It was a shiny object a couple years ago, maybe a year and a half ago. Shiny object. Hey, look, the application can respond. Neat. And now back to the way we run our lives and run our businesses and run our portfolios in the case of investors. So the whole AI thing, not sure if it's going to really be a business in the next couple of years. I think it's interesting to see the technology and the whole paradigm take shape. But the whole conversation we were having in the marketplace, where 2 years ago people were saying, Oh yeah, AI is going to do just about everything for us and do all the thinking for us. Yeah, that's not going to happen. I heard a very good phrase in this particular context. This was a respected analyst, and she said that, we've achieved natural language processing. I totally agree that you can write something and then AI apps could process that written language and pretty much parse it and then give you an answer. That's great. But she said that we haven't achieved that we have developed thinking in a box, meaning we're putting out there an application that can think for itself. And that's a big distinction in AI. I think folks are out there saying, "No, we developed a thinking box." No, we haven't. I think if you study it closely, we're not even close. Have we developed natural language processing? Yeah, I think so. I would agree with that. But we were able to do that some time ago. If you look at Siri, Siri came out more than 10 years ago from Apple. And again, it was a shiny object when it came out, then it went away. And Alexa by Amazon, same thing, shiny object at the beginning, and then it went away. So we'll see where AI goes. But back to stock prices. So we have tariffs. We have earnings that are going to come up in a couple weeks, and I think those are really going to move stocks. And we have this AI story. It's kind of like, we've had AI's really moved the markets most in the last 2 years. Well, it's put up or shut up time. It's like, hey, put up some real numbers that are real AI businesses, or really make sure that you're not overspending on AI. Because if you are, your stocks are going to get hammered. Um, so we have that going on. The economy. The economy is, headed toward a recession. There's just too many things that are factors that are pushing us into a recession. We have job losses. We have a consumer that's being more careful with their spend. We're seeing the businesses are more careful with their spend. And where it's showing up already is in travel. The recession's kind of already hit travel, where you're seeing travel stocks really go down. Just look at the airlines. They are getting hammered. And the airlines are a really good barometer because they tell us, hey, here's our data of travel. And the travel data is going down really fast. So I attribute that to the consumer is being more careful with their discretionary spend. Discretionary is, hey, after I pay all the things I have to pay, I have a pile of money left over. That's discretionary. After, my rent, that's a necessity. That's not discretionary. Food, necessity, and so forth. But once I have extra money, what am I going to do with it? The consumer is like, I'm going to save it. We're going into a recession. Things are not as rosy as they were before. The travel stocks are telling us people are being careful with their money. And I understand that totally makes sense to me. So as investors, we just need to understand that. We don't go into investments blindly, and we don't invest blindly, not observing the marketplace that we're operating in. Right now, when we look at the NASDAQ, it is down year to date, but I like seeing how the market's corrected the NASDAQ over the last, let's call it, month and a half. And in the last month and a half, it's down 13%. We had a good day yesterday. Okay. So one good day, great. And I like how the market did go in the red early and then it battled back and it closed in the positive. That's great. Good way to start April. It could have been worse. So I'll take it. The month of April, again, it's going to be a little rough in my opinion. I think we might see some sell-offs in April. We see that the NASDAQ, is down 13% from this point. We could go down another 10%, and that'd be a solid correction. And the thing about this 13% down, it happened really fast. It's not like that the market wasn't kidding around. It sold off and it sold off very quickly. It makes it interesting now. Some stocks have been priced quite well. I started buying back into Amazon because it was sold off so much, as an example. And some other stocks are looking quite interesting. If it goes another 10% lower, more and more stocks get more and more interesting. So, um, long-term investors, this is a bit of good news. It's like, all right, cool. That means I have more stocks to pick from that are priced below intrinsic value. If you're new to my channel, I base decisions on looking at companies and trying to buy them at a discount. And people have joined the channel as a paid member. I've gotten to know them well, and I think a lot of them, share in that principle of trying to buy things when they're priced well. So, um, as we see a market that's selling off, it actually is creating opportunity, but it's for opportunity for the long-term investor. One thing we are kind of away from, which is a positive, is when we have a market where it's just a lot of exuberance. You look at the period that we just left. I mean, not too long ago, from August to December 16th, the same index, the NASDAQ, was up 24.5%. And in this era, stocks like Robinhood were flying up. And it's like, that's exuberance. Or App Lovin just took off. Hims stock took off. Palantir. And when stocks take off like that, there's no fundamental reason. It's all momentum, it's emotion, and it's dangerous. It's dangerous to the person that wants to grow their wealth, become wealthier every year, take their 100,000 and turn it into a million. Well, it's a big setback if you buy into, let's say, a Hims. You buy at the top, and the next thing you know, your investment is cut in half in a couple weeks. That's terrible. Or, Robinhood took off and then it came back down. So this exuberance is kind of dangerous, and it becomes kind of a big momentum trade of investors wanting to go in because the fear of missing out. Man, Robinhood stock keeps climbing. I got to get in. And you get in at a very high level, and then it crashes down on you. So this period is pretty much in the rearview mirror, but we just passed it, right? It's not too long ago. December 17th was just 2 months ago, 3 months ago, excuse me. I got to time check myself. So now we have this correction. It's a good thing. It's medicine. It's the medicine we have to take to be disciplined. Don't be buying into those crazy overpriced stocks. Do some analysis, get to an intrinsic value, make a good decision, establish a process for yourself that you can follow, and then you can be successful. So I encourage you to be a member of the channel. I see that Mike, the dividend investor guy, is on. Shadow Guy, they're 2 members, and you can join by going to YouTube channel. There's 3 levels. I really encourage you to get signed up. You get to join me and others on 3 different calls during the week, 2 on the weekdays, 1 on the weekend, where we talk on a conference call about stocks. And it could really advance your skill set and your knowledge, and really have people to talk to about investing. And I would bet that that's just going to make you a better investor. You also get access to tools that I use as I go through and do my analysis. You'd get access to those tools, as well as kind of a reference library, all the valuations that I have been working on. I update it once a month, and I think it's really worth being a member. You also, when you go on these streams, your name is highlighted. So whenever paid members have a stock request, I really prioritize that to show my appreciation for their sponsorship. All right, so it's good to see Mike, the dividend investor guy, and you're talking about the VIX. I agree. The VIX, I like the VIX, and the thing about tracking the VIX, It is kind of a rear view mirror kind of measure. If you look at it, it's telling you what we just saw, but it's still very productive. That way it validates, hey, people are concerned, and they have been concerned very recently. We saw that rally. Well, we got tariff day. I see, like, today is tariff day. It should be popping up a little bit more. It's just reality, right? What's going to happen? Are more tariffs going to be announced? Is it going to escalate? And next thing you know, we have 50% tariffs, just making this up, but 50% tariffs on avocados. My guacamole is going to be that much more expensive. I am not going to go through life without eating my delicious guacamole. It's just avocados are part of my diet. So I'm going to have to pay up, and I'm going to have to pay up for eggs, and I'm going to have to pay up for if I need a new car and so forth. So that fear should be measuring. And I'm willing to bet that when we wake up tomorrow, we look at this VIX, it's going to be higher, but we'll see. We will see. All right. So the futures are down a little bit. Europe, they're kind of heavily influenced by the US market. Germany down 1.7. I believe this market's open as I speak. And the FTSE, make sure I get these right. This is England, and then this is France. And then I just be guessing about these. But I know this one's German, English, French. So their stocks are down this morning. Over in Asia, the Shanghai barely closed in the positive, and the Nikkei was in the green. So, all right. So that's what's going on. In crypto land, Bitcoin is up a little bit. No, it's down. Okay. It's down a little bit. All right. So that's going on out there. Looks like Shadow Guy. Good morning. Good to see you, Shadow Guy. Really appreciate you being a member. Thank you. Omar, good to see you. So we are 21 strong on the live stream. Thanks for joining. What I'm going to do is I'm going to maybe finish off kind of just a flyby the market. I have a couple opening topics and some stocks that I wanted to take a look at that really caught my attention yesterday. Please put stocks in the chat that you want me to look at, and I will get to as many as I can on this stream. I started a little early this morning because I wanted to give myself enough time, hopefully, to cover all stocks. I apologize if you put a stock out there and I don't have time to cover it. Sometimes, geez, we've covered like 30 stocks in a stream, and that's a lot of analysis. So I'll apologize for that. The other apology in advance is you might put a stock out there for free viewers. You might put it out there. You might be waiting 20, 30 minutes for me to analyze it. It takes a while to get to your stock. So sorry about that in advance. All right. So the S&P, it was interesting yesterday that these big caps really moved the indexes, and they came back. They battled back. And the healthcare space, it had a bad day. It needed to go to the doctor and get some medicine. Other than that, it was a mixed day, but in general, it went up, and it was these big caps that caused the indexes to go up. The energy complex keeps getting it done. If we look at energy, it's number one sector. It's really impressive that, I observe it and I can never fully explain why. Like, when we look at energy, it tends to show up when everything else is down. If you look at 2022, energy was flying up. It did great during 2022 while every other sector was just really, really struggling. We had a terrible year for stock values in 2022. And here we are. Energy is number one. And then you got technology way down here, consumer discretionary way down here. So the 5-year, especially when you look at energy during COVID, energy got hammered because people drove far less. We had to pretty much go home and stop driving. And so that was interesting that stocks got that low. I didn't sell any stocks during that COVID crash. I actually bought more, and I'm glad. The only regret is I wish I would have bought far more because it was a very quick, it was like a very vertical V. It went down, then went up. Um, so energy's number one, materials number two, staples number three. Just following this thread, let's, kind of have my hound dog. I'm smelling money. And smelling money, man. Where is that money going to be made? Well, energy. You got energy. Exxon's up 10.66% year to date. Chevron up. Total 18. British Petroleum up 14. Equinor up 13.6. Hess 21. Beautiful. And as we get smaller, these numbers are going to look really impressive. Cheniere Energy 28. Year to date 28. Those are beautiful numbers. And this one, EC, and I got this one wrong, I think, on my video. I said this looked like a European company. It's not. I was corrected by a viewer. Thank you. This company is headquartered in Colombia. Look at that return, 34%. Sign me up. And then this one here, 16%. So those look really, really good. Occidental is a stock in the energy complex. This is a stock that the great Warren Buffett owns. And during this time, when the stock went from $9 a share up to above 50, up to 60, of course, Warren Buffett is a genius. He's a legend. And he looked like he just was the smartest guy on Wall Street during this era. And he kept buying into Oxy. But you see that the Oxy price has been pretty much going down. But I did my analysis, and I want to thank Mike he coincidentally asked me to take a look at Devon Energy. I hadn't looked at Devon Energy. So I did the analysis on Devon Energy. And in doing so, I realized that I had a miscalculation in this schedule. I started using Google Finance quite extensively on my model. And this one here, I had to kind of hard code the Chevron shares for a while because it just was giving me the wrong read. Well, I copied and pasted that, and it put this number incorrectly hard coded when I expect it to automatically update based on my Google Finance function. So I caught the error. So thanks, Mike. I retraced my steps and realized, hey, that's wrong because I did Devon, and Devon came out, a little light on the discount. But Oxy, once I updated it, it's a stupendous discount. Taking you through Oxy, this is what I expect. Now, the oil business is tough because based on oil prices, an oil company will be far more profitable when high oil prices, and they'll be less profitable low oil prices. Now we're seeing an increasing oil price. We're in the 70s. If we were to see an escalating oil price, then Occidental and everybody else is going to make money. So to try to do a forecast using the last year is not what I decided to do. Instead, I'm taking a 5-year average and saying, okay, that's going to be the average. So over the next 5 years, the average I think is better to start with. And when I forecast cash flow for the next 4 years and then terminal value, I get a really nice intrinsic value for Oxy. Stupendous. Now, if oil prices get up to like $100 a barrel, this stock's going to fly up. Now, not sure that's going to happen, but if it does, I guarantee that's going to happen. But when I do the valuation, Oxy, based on free cash flows, is highly discounted. And one element of confidence is the great Warren Buffett is in this one. So I'm like, yeah, he's probably seeing something that is showing a discount because that guy doesn't invest unless there's a really good discount available. So Oxy's looking excellent. So this whole energy move is real. So I put in my buy order on Oxy. Is the market open? No. So I'm probably going to be an Oxy stockholder at some point today. And Oxy looks really, really good. Devin, I delivered this to Mike, the dividend investor guy. It looks okay. It's fairly priced based on cash, and it is based on earnings per share. It looks really good. So I think there's some good value in energy and in other sectors outside of technology. Technology is beginning to look better, but I think technology has a lot of momentum to the downside right now. So it's going to take a little time to buy into a technology stock and then make some money. So Oxy looks really, really good. I'm glad that I was able to retrace my steps and confirm that I made an error and I fixed it. So there we are. Oxy, really good opportunity. If we look at Oxy, I think we looked at that chart, and it's hasn't done anything for a couple of years. Now, oil hasn't done anything for a couple of years. So that's part of it. And we'll see where it goes. Today, it's going to open down. So I'm pretty sure I'm going to be a stockholder of Oxy this morning, probably right after the market opens. All right. So that's one stock I wanted to cover. Another one is DSP. Now, DSP, I want to thank the community for oftentimes we follow threads of like, hey, this sector looks good, this company looks good, and then we compare it to its peers. Well, we were following the thread of AppLovin and Trade Desk, and those are two competitors to Viant. And when we compared, and I think Viant was suggested by a viewer of a live stream, and then we kicked it around, and Viant is in the same space as AppLovin and Trade Desk. Now, they would probably argue that we do it a little different, but they basically help marketers that are marketing online on YouTube, on now Netflix, on Facebook, Instagram, TikTok, you name it. These guys help, and they help you get the most return on your investment when it comes to advertising. Awesome. Now, what I really liked about Viant is, so I'm gonna quote the great Howard Marks. It's not what you buy, it's what you pay. I did a super investor video on Howard Marks. I released it this morning, and I've been investing for a long time. I have followed Warren Buffett for 30 plus years. Back in the day, Peter Lynch was one of the guys that I really followed. I no longer follow Peter Lynch's strategy because I think it worked 30 years ago, but not today. But now probably my top guy is Pat Dorsey. But I studied Howard Marks kind of doing my homework for that video. I just hit pay dirt. This guy is excellent. His philosophy is excellent. I took so many pearls of wisdom away. I encourage you to watch that video, and I encourage you to read Howard Marks' work. Watch his videos. He makes it very clear. These super investors are super generous with their wisdom. He tells you how he's made billions, and he explains it very clearly. And his approach is very, very easy to grasp. So I loved learning about this guy. And this is what the guy looks like. This is their website, Oaktree. They have a free memo. They have free videos. It's like, man, talk about easy and free and super useful. So I'm going to quote this guy. Brilliant super investor. He's now my top 3. That's how good the guy is. I'm going to put like Pat Dorsey, Warren Buffett, Howard Marks. And FYI, Warren Buffett said Howard Marks is the real deal. He's a really good investor. So check out Howard Marks, man. I think you'll be glad to have studied that guy, because I certainly was. So it's not what I'm buying. I'm not buying AppLovin because I think AppLovin's priced really expensively. I'm buying Viant because I'm getting an excellent price. And I got to that point. Now, this stock really went up and really came down. All right. But you can see, and this doesn't really help me a whole lot when it comes to showing the recent rise in Viant. So I'm going to go here and show you that, hey, I started buying into it and then boom, up 16%. Beautiful. So now that's a what 2-day run. So it's nice to see the stock really fly up. But the work is not done. I just started dollar cost averaging into this darn thing. I got $3,000. I wish I had 30 grand and it went up 16%. But I am buying at a terrific discount. It's not what I'm buying. I'm not buying AppLovin, the top tier, most popular stock. I'm buying Viant because I'm getting a superb discount. Let's take a look at that discount. Okay, so when I look at the free cash flows for Viant and I forecast those cash flows into the future, they're really growing nicely. Look at their top line growth, beautiful. In the space, right? This is advertising on new forms of media. It's not going to get smaller, it's just going to get bigger. You look at old school advertising. I'm sure many of you have seen Mad Men, the show. It's a little old, so maybe older guys like me enjoyed watching it because those guys were kind of out of their minds. They would drink all day and make these advertising uh, strategies for companies back in the 60s. That whole industry is gone. That's not how you advertise today. Today, you advertise on YouTube, on TikTok, and it's a different game. You don't advertise in magazines. Magazines are over. It's done. So the space that Viant operates in is going to continue to expand. The addressable market's going to continue to get big. It's all about advertising, having the right information, advertising at the right times. All that stuff Viant helps with. So the growth rate, I am very optimistic they can achieve these growth rates. And the intrinsic value of those cash flows end up being about $1.3 billion. They have only cash on the balance sheet, no debt. Another point that, hey, this is a strong business. You're strong because you don't have any debt. It's like being at home. You're like, I have no debt and I have $500,000 cash in the bank. Hey, that person's got a strong financial position as opposed to I got $10 in the bank and $10 million of debt. Whoa, good luck with that. All right. So equity value, once I take the intrinsic value and then I add cash, we're at 1.5 billion, but the market cap's only 835 million. So I'm snatching up shares. It's hard to buy when the stock's flying up, but I'm snatching up shares. It's not what I buy, it's the price that I'm paying. Howard Marks, awesome guy. And I'm glad that I started buying into DSP. I'm also glad that we're collaborating because these ideas, I mean, Viant's so little, I probably wouldn't have found it unless somebody would have brought it up and we kind of kicked it around. And I'm like, wait a second, this thing's got a lot of value. I'm buying. So here we are, DSP flying up, and hopefully they have a good day today. It looks like they did have in the pre-market. This is not showing me the pre-market, but it's going up in the pre-market. So that's a good sign. Keep flying up DSP, although give me a chance to buy some more shares. All right, so we went over DSP and let me check some comments here. Magical Self, how are you, sir? You want to look at Alab, ALAB, I should just say. And then it's Light. I want to say that we've looked at Light. Yeah, I'm pretty sure we have. All right, so bear with me. Got some stocks that I wanted to cover, but bear with me and we'll cover those. Android PC. You told me Howard's one of the best out there when it comes to philosophy of investing. You are correct. And multiple people told me about Howard Marks. And I got there, right? Now, there's a million things that I want to study when it comes to investing. And over time, I get to study them. And I'm really glad that I did study Howard Marks. I love the fact that he is not afraid to go into investments that are way off the mainstream kind of investing theme, way off. Love that. And he's been really successful and he's really level headed and his advice is very easy to follow. It's not this fancy schmancy, philosophy or strategy. And he's not super polished, like I looked at Bill Ackman as an example. That guy's super polished. The only problem is he's a consistent money loser. So it's like, great, you sound great, but you lose money. No, thank you. Whereas you have like a Howard Marks that has that philosophy. Makes sense to me. And it really kind of it gives me a little more assurance that hey, picking a stock like a Viant, tiny little market cap, it's not the leader of the pack. It's AppLovin's like number one, then Trade Desk. But these guys, I mean, you're getting such a value for the stock that I'm going for it. And that's always been a part of my game. But with Howard Marks being successful for so long, it just kind of gives me a little more assurance that, yeah, keep doing that because it's going to work. What's up, Rotel and Cheese? Good to see you. All right, let's keep moving. So in the spirit of Howard Marks, I'm going into a stock. This is like Star Trek. They go to a place in space they've never been before. And I'm going into a stock that I've never looked at. And Expand Energy Corporation. Expand Energy Corporation operates as an independent natural gas production company in the U.S. The company engages in acquisition, exploration, development of properties to produce oil, natural gas liquids. It holds interest in the Marcellus Shale in the northern Appalachian Basin in Pennsylvania, Marcellus and Utica Shales in Ohio and West Virginia. Very good. So this is a Howard Marks investment, EXE. It's an energy. Okay, so we just went over it. Top sector. Howard Marks is in. He's been in this puppy. Year to date, 13%. 1 year, 27%. 2% dividend. What's there not to like? Has good upside from this point. Market cap, 26 billion. Revenues, 4 billion. So you're paying about 6 times the revenue for the company. Forward P is 15. Strong buy, 8.45%. This company, you see revenues go up and down in oil. That's normal. I don't hold that, as a big problem for companies because they can't control oil prices. Like when oil prices are really high, remember I was talking about 2022, oil stocks just flew up because oil prices were like I think they were above $100 a share. And at that rate, these guys are printing money. They are like just making money hand over fist. These guys certainly did that. So Expand looks good. Howard Marks is in the stock. Let's take a look at their free cash flow. I did not look at that. So the free cash flow for the company is 8 million. That's it. Yeah. Looks like they're not having a great year for cash flow. And that's why I used the 5-year average because the oil price, as it goes up and down, your free cash is going to fluctuate. But now that we see oil prices rising, their cash flow should improve. And you see that here. This year, super low, much better last year. During the boom years in 2022, 2.3 billion. I mean, you look at that cash flow rate, beautiful, just really nice cash flow rate. Now, this one here, it's not popping out as a super discounted energy stock, just to be frank. If I look at the last 5 years, which would be add all these numbers up and then divide by 5, I'm probably going to need to 3, let's call it 4 divided by 5. It would be about 800 million per year. And the best I'm going to do is multiply that times 10, because this is oil. It's not going to be like, Google that just continues to go up in revenue. So I get a value of about 8 billion, and it's far lower than this one. So that's interesting. He's in this stock. I'm glad it's working for him, but it's just, I think I can find better opportunity in energy like Oxy or others other than this one. But that's one stock that Howard Marks is in. Interesting, huh? So on EXE, you're saying that if I look at the quarterly, I'm glad you're reminding me. Wow, look at that. Beautiful. Oil prices are up. So these guys are beginning to really work. There it is. Man, Mike's correcting my work left and right. Look, cash flow is still not positive, but man, that's a beautiful growth rate. Beautiful. If they can continue that, like really high growth, these guys are going to crush it. So that's Expand Energy. Energy is really getting it done. Nicely done. All right. So that is EXE. Now, another stock, New Holdings, caught my attention. What's going on down in South America? New Holdings provides financial services for for people in Brazil, Mexico, Colombia, other places in Spanish-speaking places in South America. Stock is down 12.5%. Year to date, it's barely in the green. And again, it's not what you buy, it's what you pay, right? So the PE forward P is 20. Things I like is this growth rate. I really like their growth rate. And I know we talk about SoFi quite a bit. I like this one more than SoFi. SoFi doesn't show me enough value. In fact, I think SoFi is priced a little too high. And this one here gives me good value, and it gives me exposure to South America. The reason I like South America is, especially in financial services, there are a lot of people that are getting a bank account for the first time. I know that's hard to believe if we live in the US or Europe, where, literally when you're a kid, you're taken into a bank and they start a savings account for you. And we really enjoy the benefits of that type of situation. But in some countries down in South America, they're really getting organically new account holders. And I think that's a big opportunity to organically grow the number of account holders. So that looks really good to me. And when I value new, I have a nice discount on them. Now, my investment in new, I think I'm losing a little money or making a little money, but I still like their story. I think that they're going to continue to grow. I don't think tariffs are going to affect New Holdings, because how are you going to tariff financial services? And you look at like countries like Mexico specifically, that's the one that I know most about. Their economy is doing really well because they're producing a lot of product that they consume domestically, excellent agriculture industries, as well as other industries are working well. They have a lot of oil. Mexico produces a lot of oil, as an example. And Brazil is a huge country. A lot of people there. Colombia is doing well. So New Holdings is a part of all that. So it gives me a nice exposure. I think it's discounted by 71%. So I'm a buyer of New Holdings. I really like what they're doing. And yesterday, I think they had a nice day. That's why I picked it off. It's like, hey, what's going on with New Holdings? And in the pre-market's going down. So I think yesterday was up, and it's not showing me what it did yesterday here, but maybe it'll show it here. Yeah, it was up almost 2%. And that's why I was kind of highlighting it. In the pre-market, it's down. So that's interesting. Maybe the tariff news is beginning to wane on some of these stocks. All right. Speaking of tariffs, um, so we have the Dow is down, S&P, NASDAQ's down. Okay. Interesting. All right. Looks like Tesla announced their deliveries, and I think their first quarter deliveries were far lower, right? This is kind of a story that I'm guessing at the data. So they had a drop in deliveries, worst quarter since 2022. All right. What's the stock doing? So the stock's going down the pre-market. Had a good day yesterday. And oftentimes I hear investors say, well, Tesla is a technology company. It's not a car business. And I don't believe that. I believe it's a car company. There's one very important observation that I would put out there is if people believe Tesla is a technology company, then you would expect, well, in the future, I'm going to have like Tesla AI or Tesla technology for this or Tesla space for that. But no, Elon Musk is kind of keeping the wealth to himself. If you look at the XAI IPO, or he acquired X, that's a separate company. So if you're a Tesla stockholder, you don't get shares in that new company. So Tesla could be developing these new awesome technologies. SpaceX, separate company. You're not going to get shares in SpaceX. So the investor that thinks, well, Tesla's a technology company, they're going to keep coming up with great ideas. Yeah. And you know who's going to get really wealthy is Elon Musk, because he's going to IPO those companies separate from the Tesla stock. So the Tesla stockholder is basically going to be funding a R&D program for new companies, but the company, the Tesla stockholder doesn't reap the reward of those new innovations. SpaceX separate, XAI separate. It's like, well, what's the sense in owning the company if they're going to have great ideas that you don't get to participate in being a shareholder in? So back to the fact that I believe Tesla is a car company. Their principal business is cars. They sell cars. Competition's tough, a lot tougher. There are EVs coming out of every big auto manufacturer. There's even new companies that are EV companies coming out of China, and they're really priced affordably. So we look at EVs for some markets where they don't have as much money, right? And they're like, I can't spend 40, 50, 60 grand on a Tesla or one of their counterpart products, but I can spend 10. Well, China's got a car for you. And you're like, great. I don't care that, I've never owned a car. So buying a Chinese car, there's no embarrassment about owning a Chinese car. I didn't have a car before. I used to ride a bike. So you give me a car that I don't have to pedal, I'm good. So I think that Tesla's in for a rough future. And I would want, if I was a stockholder, I would want the leadership, Elon Musk, to answer the question of, well, if you're going to develop all these awesome ideas, how's the Tesla stockholder going to benefit from that idea? You keep claiming that you're going to, for all we know, he's going to do robo-taxis, a separate company. I don't know. That's what he's been doing with SpaceX and XAI. And if he were to do that, of course, it's going to break the hearts of Tesla stockholders, but he's the wealthiest guy on the planet. He doesn't really care about what I think. I don't think he cares about the retail investor either. But he really, really has a rock star kind of appeal. Ford P is massive. I mean, this is a car business. You can buy Ford for a 6. These guys are at 101. And Ford's growing better now. Look at this growth rate. Terrible. So good luck. Good luck to Tesla stockholders. It's going to be a little bit of a rough day. All right. So checking the chat, and then we're going to get back into some stocks. Android PC, you have New and SoFi at decent prices. Very good. Tom Canner, isn't he developing robots? Yeah, he could be. And again, is he going to keep that as a Tesla product, or is he going to IPO it as a separate company, and then the Tesla stockholder doesn't get any benefit from the robot company? And the robot, thing, industrial uses for robots is certainly there, but we've been creating robots for industrial purposes for 30 years. It's not like, oh, we're going to put robots in production lines. We've been doing that for 30 years. It's already been done. There's so my brother-in-law, he works at the Los Angeles port, and there's an entire port that is completely automated. No human beings are anywhere. And you can check it on YouTube. Los Angeles port, fully automated port. This is a massive property. And there's parts of the port that are, kind of traditionally manned by people, crane operators and all that good stuff. But the other one, the crane is done by a robot. They have these robots, which are basically little flatbed robots, and the containers get put on those, and then they pretty much navigate themselves to where they're supposed to be. Really impressive. They've been doing that for 10 years. It's like, this isn't new. This is like we've been there, done that. Just people weren't paying attention. So when companies come out and say, oh, we're going to create robots. All right, whatever. We've been doing that for a while. Well, how are you going to make them better? Are you going to make them cheaper? Are you going to make them, how are you going to improve the current state? So that's what I would put out there. All right. So yeah, BYD. Would I back BYD? The answer is no. I don't like car companies, and the BYD situation is high growth coming at high losses. It's like, you know what? I got to stay in my lane. I'd rather find companies that make more sense to me. Like the car business is terrible. And it takes a lot for me to decide, okay, I think I'll back a car company. And that's my point there. Tomas Blanos, how you doing, man? Lardog. Have I looked at GMAB? Seems like interesting stock, possibly good investment. Biotechs. Yeah, we've looked at this stock before. We're going to look at it again. I'm going to note it. Just hang in there. It'll take a few minutes. And we'll take a look. But we have looked at that one before. All right. So let's crack open one of these suggestions. I think I forgot who suggested it. ALAB. Astera Labs. What do these guys do? Astera Labs designs, manufactures, sells semiconductor-based connectivity solutions for cloud and AI infrastructure. It offers an intelligent connectivity platform comprised of semiconductor-based mixed signal connectivity products that integrate a matrix of microcontrollers and sensors and Cosmos. The company provides Cosmos software suite, a connectivity system management optimized software that enables management and optimization of resources for large fleets of cloud scale. Okay. So this is in the data center. It handles connectivity and networking. Got it. So over the 5-year, look at that. This is like a beautiful mountain. It's a neat little chart, but I mean, if you're an investor, you're like pre-ordering your Lamborghini at this point, and now you're going online and buying a bus pass because you lost well more than half your investment. Overall, it's been a good investment over the 5. Well, sort of 72% is okay, but I like to see 100% or better. Over the 1 year, not so good. Over the year to date, terrible. So what's going on? Market cap, 10 billion. Revenue, 400 million. They have a forward P, so they're going to be profitable. Let's take a peek. So very good growth. They're a new company. So they haven't been around for a long time, and they are growing really well. They are producing free cash flow. Hey, I think we may have cracked open an interesting little company here. 100 million. You see how they went from negative 15 to 100. Now, I want to look at their website. So these guys are in the US, semiconductors. They're in Santa Clara, right in the heart of the innovation heart of technology, the Silicon Valley. So these guys are in this space. They're little. Okay. All right. Very interesting. Okay. So I like what I'm seeing. I'm seeing high growth. I'm seeing free cash flow. And I'm seeing a market cap that's very reasonable, 10 billion. You think about that cash flow, 100 billion, right? 100 million. But they're growing at 250%. So it's like, man, they're going to get to like $1 billion of free cash flow in no time, because they are still small. Their gross margins are 76%. And they're probably outsourcing the manufacturing of their product. They outsource it to, they're probably a fabless semiconductor company. Fabless means we don't invest in the big foundry and yada, yada. We go to TSM. We go to somebody who can manufacture this for us. But we control the intellectual property, the design, the engineering, the patent. And we make all this money. These guys are going to be acquired. I'm sure Broadcom and AMD, NVIDIA are probably eyeing this company going, I want this growth. These guys are taking off. This is an interesting little company. Let's get into this company. What is going on? It is 6:27, so market hasn't opened. I want to look at their financials. I don't want to take any chances. I want to see the financials. I think Stock Analysis, the website's excellent. They pay me no money. I pay them for a subscription. And I've been able to communicate with their CEO, the Stock Analysis guy. Great guy. Just is dedicated to providing a really good platform. But sometimes that platform doesn't show me the right information the way I like to see it. And sometimes there's a blemish here or there. So I don't want to take any chances. I want to read it and read it from their financials. All right. So where are their financials? Here we go. SEC filings. So Howard Marks was educated in accounting. So I was educated in accounting. So I like that about him. And he described being able to read financial statements as almost, if you're going to study English, and being able to read and write and comprehend English very well, or whatever language that you have in your country. The skill set of being a good accountant, or if anything, just being able to read financials, it's pretty much like, hey, you're learning the language of publicly traded companies. So it's a skill set that I really encourage you to learn. It does take some effort. Some people just can't get it. I did. I had a knack for it. I really enjoy finance and accounting, and really enjoy reading financials, because to me, I can read a financial statement far easier than I can read, like, let's say, some piece of literature. I actually get bored when I read, but when you show me a schedule, I'm like, hey, now we're talking. This is great. All right. So these guys, balance sheet, cash, increasing. That's a sign of a strong business. Small business that's increasing cash. That means they have a product that everybody likes. Not only that, they have marketable securities of $834 million. So they're up there well north of 900 million of cash on the balance sheet, ready to go. They have no debt. First sign these guys are strong. Revenue, we talked about the growth, phenomenal. So why is the gross profit so low? If you recall, when I looked at stock analysis, it showed me a gross margin of 76%. This here is showing me, I'm reading it wrong. Wake up, wake up. I need more coffee. I've only had 1 cup of coffee this morning. I don't have my 2 cup of coffee brain on just yet. So gross profit's 302 million, which is phenomenal. That's 76. That is phenomenal. It only cost them one fourth. Like when they sell one of these components and they say, give me $10,000, please. It only costs them $2,500 of materials and direct labor and direct costs to deliver that item. And then they get $7,500 of profit. That looks really good. All right. Now I'm going to touch on this topic, but I'm not going to dwell on it. Some investors, and I respect it, they don't like when companies issue stock to employees. I like it. A business like this is only going to be worth a lot of money if they have the best talent working at this company to make the best product that's going to continue to grow at 250%. And the only way you're going to get that top talent is if you say, we're going to make you a part owner of this business and we're going to give you these restricted share units. Then they come work for you. If you don't do that, they go work elsewhere. If you're not going to give them stock, they can go get a job at Apple and it'd be an awesome cush job. They don't get stock. They might get a few stock units, but they get a way better job. So to attract talent, you have to give them RSUs. It's just it's a means of doing business in the Silicon Valley. I have no problem with it. I actually like it because the person that receives those RSUs is now working 20 hours a day. And that's no exaggeration if they're trying to beat out the competition. And you get that kind of passion when you make people part owners. All right. Operating cash flow. Look at those beautiful numbers. And this is CapEx. Man, this thing is looking awesome. So they're doing $102 million. I mean, what's the forecast here? All right, so let's kind of crack open a new valuation schedule. Let's do this on the fly. Let's kind of crack this thing open and see how much value is inside. Let's go to the king of semiconductor with no argument, and that is NVIDIA. Let's use that, see if we can get some NVIDIA mojo into the valuation of Astera. So you see that we have had a correcting market in technology, and semiconductor is in a nosedive. It's like, man, nobody wants to buy semiconductor right now because we don't know how low it's going to go. So these guys may be caught up in that. I'm fine with that. I'm good buying it, holding it for a couple of years and making a boatload of money. I'm fine with that. Stock market's really nutty at times. And I'll use that emotion the market has in my favor. All right. So now this is a good example. NVIDIA, The king. This is like the Elvis Presley of semiconductor. It's got that awesome, the older Elvis suit on with all the gems and stuff. I'm a big Elvis fan, by the way. And Astera is not Elvis. So we're going to go up to, it's a small company, so we're going to 10. Discount rate of 10 because they're smaller. They have a great balance sheet, but they're smaller. What if tomorrow NVIDIA announces, we got a technology that's 10 times better than Astera? Well, Astera is going to be hurting. Not imagining that's going to happen, but it could happen. So let's just kind of keep that in context. Now, they're going to be a high growth rate company. So their cash flow is going to just take off. You're growing at 243%. Huh, beautiful. So I'm going to go 100% growth in years 1 and 2, and then 50% growth in years 3 and 4, and then 5% growth long term. Okay. They had, this forecast represents from April 2nd, 2025 forward. Okay. It doesn't represent the year we just covered. So my best guess is they do $102 million of free cash flow. And I'm going to multiply that times 2. That's what I expect they're going to do the next 12 months, which might be conservative. If you look at 250% growth rate, maybe they do 300 million, maybe they do 400 million, but let's just kind of go with this. So first 2 years are growing at 100%. And then years 3 and 4 will grow at 50%. Okay. That's what this factor is looking at. And then terminal value is going to grow at 5%. So all in, the intrinsic value of all those cash flows, $13.5 billion. Now they had like $900 million of cash with no debt. So I add that cash because you're getting all those cash flows in the future and you got this cash in hand. Beautiful. And no debt. So their market cap's 10 billion. The company is worth 14 billion. This stock is discounted. Man, we have found a semiconductor stock that is exciting and it's discounted. I knew it was going to be a good day. All right. This stock's up 63.63% today. I want to take a peek at, and I'll look at it together, and then I'm going to switch screens. What do analysts think? 13 cover this stock. They think it's discounted by 79%. The worst case scenario is we're only going to make a little bit at $65 price target. But the best case scenario is we're going to more than double our money. Hoo-hoo. All right. 129 per share. That is the earnings per share with a 48 forward PE. Yeah, you're growing at 243%. I'll pay a 48. I'll pay a 60. That is phenomenal. Margins are 76%. Remember that. And as they get bigger, that margin is going to expand. I like what I'm seeing. I really like what I'm seeing. 129. PE 48. And what was the growth rate? So 16 analysts contributed to the average that we're seeing, 16 and then 10. They're going to grow that by 36 and 44. So I'm going to go with 20. As you can tell, I go a little conservative here or there. I just don't want to get way out of hand. So this stock's looking really good. And I bet you this stock is this stock is, I bet you this stock will get sold off. Remember how I was saying that we're not through the bad news, especially for NVIDIA. There's probably going to be days when this thing sells off. But for now, this thing's a buy all day long for me. And you see the chart that these guys went through. Holy smokes. when the market starts correcting, it abuses these small caps. I mean, we saw these guys are growing like a freaking weed. And yeah, this is overdone. 280% appreciation over the course of 3 months. Yeah, that's a little too much. I agree. But then to pretty much send it down to purgatory is likewise just as irrational, overly emotional. Well, I'm going to use that momentum in my favor. I like this company. I like this company a lot. Wouldn't be surprised if they get acquired. So, Astera Labs, it's on the buy list. It is on the list. Let me see if I'm a Oxy stockholder. I should be. Let's see here. Boom. I own Oxy. That's what I want to see. All right. So I'm going to think about it, but I think I'm going to buy Astera later today. I think it's a really neat company. Everything I saw was like, those guys are set up to be successful and they're probably going to be acquired. I just can't expect, because they're doing something like when you look at data centers, right? What is happening currently is that a business might run in a big public data center like with AWS, and then they have another part of their enterprise running in Microsoft Azure, 2 different locations. Well, the networking becomes super important. So this stock is really timely. You notice the Google acquisition of that cybersecurity company. It's a cybersecurity company that helps companies that have multi-cloud. They have clouds with AWS, Azure, Google Cloud, and they help that company with cybersecurity. Well, these guys are helping with the communications between those clouds. That's really useful right now. Pretty hot. So I'm going to put these guys. See, this guy's bought. We're done there. I just got to update some other information, but here are the companies I track. This guy's going in the list. If you are a paid member, you get access to a lot of this data, just reference data. I never recommend you buy any stock that I cover. I just share my analysis with you. But this stock is looking good. And semiconductor, I love semiconductor, but you got to buy at the right time. I'm not the first. It's not the first time you've heard that from me on semiconductor. I've made money on semiconductor. I love semiconductor. TSM tripled my money. Thank you, TSM. So I'll copy down my Google Finance sheet. I will refer back to my intrinsic value that I got to on this stock. There is value out there. This correcting market, see what I mean? This correcting market is providing better discounts, especially in technology. As we look at technology stocks, I mean, a year ago, I'd be like, man, technology is super expensive. Now we're beginning to see that some of these stocks are showing discounts. So what's going on with this stock? I have a feeling I'm going to be an Astera stockholder by the end of this week. I don't like immediately buying a stock. I like to sleep on it, make sure I did all my work right, and then I buy it. So I don't need to be in a hurry. That's how I treated Oxy. I made an error in Oxy, corrected it, slept on it, boom, Oxy stockholder. So Astera Labs, nicely done. Whoever put that stock on the chat, nicely done. Let's move over to Light. Lumentum Holdings manufactures, sells optical photonic products in the Americas Asia Pacific, Europe, Middle East, Africa. The company operates through two segments, cloud and networking, industrial tech. So the person who asked about Astera asked about this one. I have a feeling you really like semiconductors. $4.45 billion market cap, revenue, 1.4 billion. Forward P22. Looking good. That look familiar? Didn't Astera have a up and down? 36% year to date, 23. Now these guys are not growing. They're not growing really fast. Astera was like just taking off. These guys, not so much. And they are a small company, right? Not tiny like Astera, but you're 1.4 billion and you're having a pause on revenues. That scares me. Okay, why? Are you being replaced by a better technology? Is a competitor better, stronger, less expensive, faster than you are? That's what goes through my head. I like seeing top line growth. These guys don't deliver cash flow. Problem. Astera's got free cash flow. Why aren't you delivering cash flow? Well, maybe because my margins are terrible. 27%. Astera's at 76. Astera all day long. Lumentum's not looking good. Not looking good. Let's look at their balance sheet. $2.6 billion of debt, $900 million of cash. They have net debt of 1.7. Astera has no debt. You've seen that we just saw a strong young company, and we're seeing a different company, same industry, similar industry, I should say, and they're not as strong because margins are lower, negative cash, balance sheets carrying a debt level, weaker. Astera all day long. I will pass on Lumentum. Don't need to see anything else. I already see you'd have to offer me an outrageous discount for me to get involved. But right now they're doing negative cash. It's really hard for me to value companies that are in the negative because I have to imagine how are they going to fix their business? And there's just too much imagination involved. So it's a pass on Lumentum. But the analysis was productive because we found ALAB. I mean, I can call it a day. I could take the rest of the day off. I found another winner, chicken dinner. So nicely done, whoever put that out there. Let's take a look at the markets. What is going on, stock market? Show us some love. Enough of this selling off stuff. Not bad. It opened up ugly. Look at that. It opened up way down here. It closed the day prior way up here. And the NASDAQ was way down here. Man, nicely done, NASDAQ. Fighting back. I'm not going to take it anymore. I'm going to rally up. Nicely done. And it shows signs, how we just found ALAB. I'm buying into Oxy. I'm sure other investors are out there going, hey, these prices on stocks are looking better and better. And they're probably putting buy orders like I have. And if it hits, then they buy. So, boom. That's what I'm probably seeing in the daily here is if you're going to keep discounting, some new buyers are going to come into the market and kind of buy up the market, even though it opened up much lower. Today is somewhat of a concerning day, right? With tariffs this is officially the day when they're supposed to start. So a little bit extra emotion. So that's what's going on there. Let's take a look at Oxy. I've been a stockholder in Oxy for about 19 minutes. Now I'm losing money. I guess I'm not going to have a career in day trading, but I do have a solid career in being a long-term investor. I'm good. I'm going to buy into Oxy. I'm good with Oxy. So this guy here, this is the fear gauge. We're at 20. Yeah, that's where we belong. That is where we belong. All right. Moving on to the next stock. GMAB. We've looked at it before. And let me refresh my memory. Genmab Biotech Company develops antibody-based products and product candidates for the treatment of cancer and other diseases in Denmark. Okay. Over the 1 year, down a lot. Over the 5 year, down. So, $12 million market cap, revenue $3 billion. So you're paying 4 times revenue. Forward P is low. Okay. So they're growing really well. So that looks good. And their growth is accelerating if you look at the quarterly somewhat. It's kind of a little bit up and down. All right. Free cash flow. And this is in the foreign currency. So it is positive. I'm going to come back to it. So profit margin is really high. Free cash flow margin is really high. Gross margins are really high. They're probably mostly licensing their patent. Hey, we got this patent, and others manufacture this particular drug solution, whatever it is, and they get a royalty. So these guys have more cash than they do debt on the balance sheet. Very good. And this is in US dollars. This is one user tip that I'll give you is if you have a foreign currency company, I should show it here, DKK. But if you go here, these guys will do the conversion in currency when you look at the statistics. So that's what I'm depending on. So nice $2.8 billion cash balance. And they do $1.1 billion of debt. At their growth rate, this is a 20. So you got 22 billion plus 3 billion. Was it 3 billion in net cash? Yeah. So you got $25 billion of value. These guys are at 12 billion, heavily discounted. And what I said back when we analyzed this business, and I'll say it again, is I have a lot of choices in healthcare that look like this, that you have heavily discounted companies that are doing really well, growing really well. And I have a lot of choices here in the US. I'm located in the US. So I make a better decision if I'm analyzing a company in my home country. So for anybody in Europe, especially if you're in Denmark, this is an excellent idea stock because you'll probably be able to understand and gauge what the marketplace for pharmaceuticals is in Europe, Denmark, and make a better decision. For me, I'm not interested because I already have a lot of other choices in healthcare. I already own a number of healthcare stocks that have fundamentals that look like this, that have a story probably that resembles this. So I'm going to stick to the stocks that I have here in the US that are small caps that are doing really well, that are going to do really well going forward. So good one. It was, again, good stock for all those in Europe. Check it out. You'll probably be able to make a better decision. I'm way over here in California, and I think it's a good one. So I think it was Lardog that put that one out there. I think it's a good one for those in Europe. All right, look at this. It is no consistent pattern. Looks like Meta's hanging on to a little gain. Netflix is doing well. Nothing really is looking good. Financials probably look the best. And let's look at the sectors. Just about everything's in the... Yeah, here we go. So communication services is in that was Meta probably hanging on to its value the best, but everybody's in the red today. Okay. Nobody gets out unscathed today. Everybody's going to take a little haircut. Meta's up a little bit. Tesla's still in the red. Broadcom's up a little bit. All right. So that's what's going on out there. What's going on with Oxy? All right. So let me check the chat here. Mike, the dividend investor guy. Yep. Got your comment on the market. Ozeek, good morning. How are you? So you'd like to, hit the wrong one. So you'd like to learn the language of privately traded companies. Yeah, I think that's a more involved kind of, you have to do analysis and you don't get the benefit of seeing what the market has reacted to that particular stock or company, I should say. So yeah, that would be kind of a little more of an advanced level kind of topic, and usually reserved for big investors. And I know that you're a qualified investor, so you get access to that market. Rodrigo Montera, Mr. Cooper Group has been doing well. Yeah, I noticed that. And I own real estate, and Mr. Cooper is one of our lenders. So I think it's this one. No, it's not this one. So what's the symbol? I don't know what the symbol is, but I did notice that. I noticed it yesterday. It caught my attention because we have a loan with them. So you are right. So Tomas Prime. You want to look at Prime? Let me note that. All right. Before I move over, let me highlight. I see a lot of people on. Some of you've kind of come on my live streams for a while, and it's great. Thank you. How about joining my channel? You go to my homepage, check out the options for you. And I've enjoyed and appreciate your chat comments on live streams. Would love to talk to you on investor calls. If you join, we get to talk on investor calls. So please take a look at it, become a member, support the channel, and I would appreciate that. Take a look. You also get other perks. Let me show you what you get. I think that's important to check out. So you get the model that I showed that we did the analysis on Astera with. You get that value model. You get a copy of a retirement model, so you can retire early, retire young. You get I do my analysis and I update it once a month. I'm going to update this at the end of this week. So it'll have Astera in there. It'll have everything that I've updated through the course of a month. I don't want to update it every day because it'd probably be a little too much, but I'm going to update it and then you can refer to it. Hey, just from a reference perspective, I wonder what the analysis was on Chevron. Boom, you can pop it up and see what I concluded to. It's never financial advice. It's just what I'm seeing. And a couple of other tools, you get access to that. So take a look at the membership. It is, I think, very worth it. I think you're going to improve your skill set if you become a member. And I think it'll also be more enjoyable. So I think a big part of having a channel, which is really cool, is I get to talk to like-minded investors. And that in itself has been really gratifying. It's been really a good experience in just talking about investing. I'm set, financially, but I want to grow my wealth. I want to grow it for my family. I want to grow it just because I want to achieve something that is really difficult. And all those things, I think other investors in the channel in some way kind of identify with. They're like, hey, I want to grow my wealth. I want to be better. It's almost like, if you're whatever sport, right? Let's say you love archery. Well, you want to become a better shooter at archery or whatever activity you're in. If you're an attorney, you want to be the best attorney you can be. And from an investing perspective, I want to keep getting better and better. All right. So couple more comments out there. Rodrigo, co-op. Yeah, you can call it that. I don't have a schedule for live streams. It's just, I, depending on the day, and very busy. And I do have a schedule for the paid investor calls, and I keep to that schedule. I have a conference call with investors on Tuesday mornings at 9 a.m. Eastern, and then Wednesday evenings, which is tonight, at 8 p.m. Eastern, then on Sundays at 1 p.m. Eastern. So that way investors can attend the one that they can attend, or they can attend all three, or they can attend the ones that they want to. So I keep to the schedule on the paid investor calls, but not on the live streams. Okay, well, let's take a look at Prime, and I think we're going to wrap up the show once we take a look at Prime. What is Prime all about? Primoris Services Corporation provides infrastructure services primarily in the U.S. and Canada. The company operates in two segments, utilities and energy. Wow, look at that. So this is the data center chart. It went up and it came down. We saw that with Astera. We saw it with Light. You're not seeing that with NVIDIA. NVIDIA went up and then stayed. It kind of goes across. These guys are up 1.42%. Let me take a peek at their website just so I can put my head around. So these guys are an engineering company. So they're building data centers, if I'm correcting. Yeah. So they're building data centers. So construction companies, from my observation as an investor, they're not long-term holds because they have a couple good years and then boom. And you could see their valuations are not all that great because the market cap's $3 billion and the revenue is $6.3 billion. So you're getting the company for half of sales. Where we looked at Astera, you're paying 6 times the revenue. So you see that ratio. It's like, well, if you're a construction company, the market doesn't value you as desirable as like a semiconductor company or a software company. The forward P is 13.5, strong buy. Again, we saw up and down. The forecast for data centers it's going to slow down, in my opinion. These guys have been growing, but let's look at their margins. Margins, 11%. This is where the sound effect comes in. Wah, wah, wah. That's terrible. Astera was at 76. You look at NVIDIA, they're in the 80s. You look at, other companies like Meta, they're in the 80s. You can go, GemMab was at 95. That's a biotech company. I'd rather shop there versus a company that just, they sell $1,000 of services and they get to keep $110. Where if GenMab sells $1,000, they get to keep $950. This is the cost of providing that service is 89% of the revenue. So that's why these guys are probably not going to generate a ton of cash. They had a very good cash year. But you look at the years past, it's really up and down. This is what I mean is good year, bad, bad. Okay, good. They'll probably have bad. So not interested. I get to pick the types of companies I get to invest in. The construction companies, it's not like, hey, there's a construction company in the top 10 most valuable companies. No. When you study the top 10 most valuable companies, it's very clear. Technology, e-commerce, technology, media. It's a conglomerate, but their biggest holdings, Apple. Car company, technology, biotech, pharma. So the top 11 companies, technology is the number one space, followed by communication services. And I think healthcare is really going to make a lot of noise. Nowhere do we see a construction company because they don't accumulate value. They have a good year. Yay, done. Move on. So That's where we're at with that. We are 34 strong on the stream. Thank you so much for showing up. I wish you the best of luck with your investments today. Look at that. The NASDAQ's in the green. Boom, baby. You can't keep down value forever. Oxy, I'm still losing money. I'm going to have to do 10 push-ups if I lose money on Oxy today. All right. So everybody, thanks for tuning in. I appreciate it. It was really, really fun. Time to land the plane. That's right. It was a good stream. I appreciate it. And I wish you well with your investments. I'll try to stream again probably on Thursday or Friday. We'll see. We'll see what my schedule is. And I'll have to announce it hopefully an hour or two before I actually stream. But again, if you want consistent schedule, paid members have that consistent schedule, and I keep to that schedule. I'll continue to keep to that schedule. So everybody, thanks for tuning in. Good luck today.